Hey everyone, welcome back to this channel. I got a pretty cool episode for you guys today. First of all, I want to tell you why I switched to gold and US30 from GU and EU. Then I'm going to show you some of the trades I took this week. Today we'll probably just do US30. And then ultimately what the goal of this channel is going to be moving forward is I'm actually going to start showing you guys my strategy that I use for trading US30 and gold. We'll actually start sharing it today, and I've actually simplified the process a lot. So the move to switch to US30 and gold came from me wanting to get away so much from, I guess, scalping slash intraday trading to more intraday slash swing trading. So right now I'm working on establishing the intraday aspect of it. I've pretty much dropped 1 minute entries and more focused on 5 and 15-minute entries now. We're not really going for any small moves. Like US30, I'm looking, for 2, 3, 4, 500 point moves on a trade, maybe even more. Gold, I'm looking for a minimum of 150 pips, anywhere from 150 to 500 pips. And if the move is going, I'm looking to get in 2 or 3 positions in that move so I can turn 300 or 400 pips into maybe 700 or 800 pips. So ultimately, with this transition period, I had to simplify the process, and a lot of my strategy just relies on order flow and alignment of fundamentals with technicals. So right now, I'm waiting for FOMC to come out. So until that happens, everything's just going to be intraday. When FOMC comes out and I get a proper directional bias, it's going to make more sense as to which direction I can hold in. Obviously, the trades I'm going to show you on US30. So I took some trades on Tuesday and Wednesday. And ultimately, right now, we're just playing intraday bias, and which is the safest. And essentially, we're only looking for buys in the direction of the daily trend. Now, something I want to mention to you guys is my system RLS it's pretty complex when it comes to trading Euro USD and GU on like the 1 minute. But as I've started trading US30 and gold, I just realized that gold and US30 use everything as liquidity levels. So your daily highs and lows, your Asia highs and lows, 4 hour and 1 hour lows and highs from the previous day, daily and 4 hour support and resistance levels, for example. I'll wait for multiple taps of that and liquidation of those levels. And I've actually just found it to be simpler to trade. Now, with the way I'm trading now, there is not a trade every day on every pair. It's just not possible. But it's kind of my goal now. So my goal now is to stop trading so much and start trading more quality setups and less quantity. And ultimately going for more pips as, it'll probably be a lot of intraday, and I'm kind of hoping, 3, 4 swings a month maybe. If the 2 pairs give me that on some months, I'm sure they will. Some months they won't. But, I just want to say, guys, thank you for supporting this channel for this long. I do appreciate all the love I've been getting. I know some of you have messaged me that you want to learn more of the strategy and you want me to share more of it. So this is kind of the direction we're going to go in now. So yeah, let's get into US30 and why we took the trades we took this week and ultimately what we're looking at. The first step for us is, since we're going for a higher pip count, is I'm going to be mostly looking at daily. If the daily doesn't have enough detail, I'll be looking at the 4 hour. With the daily, I find the 1 hour and 5 minute entries pair well. Whereas when it's the 4 hour, I found the 15 minute kind of pairs better with it. But still, it's still something you can kind of bounce between 5 and 15 minute entries. But yeah. If we look here, the last thing we did is we made an all-time high. historically, anytime we make a new all-time high, there is eventually a pullback coming. Sometimes this pullback is fueled by fundamentals, which I'm going to talk about probably at the end of this video. And sometimes the pullback is fueled by institutions taking profits. In most cases, it's going to be profit taking. So fundamentally right now, we're waiting for the Fed to decide if they're going to cut rates or not. I'll touch on that after I show you guys the trades. But at this point, we can actually go one more day. Let's see, one more day maybe. All right, here we go. Ultimately, right now at this point, so Monday, I think Tuesday, I started looking at US30. Ultimately, right now at this point, you can see the last thing we did is took this high. Now, what I like to do is kind of pull the last few legs and try to figure out where my reactions are coming from. You can see here my reactions are coming below the 618. And when I told you guys I've simplified this process a lot, like I've simplified it a lot. I can pretty much trade with a fib for reactional areas now. And it's made life quite a bit simpler. So if we're looking for reactions below the 618, so that kind of puts me in the 618, 786 range. Now if I get a reaction here on the daily, I want to see where this daily reaction came from. And we came to the 786 just below it. So these are very reactive levels. Now the only thing I need to do is see if there's any kind of liquidity there. And for us, I can pretty much tell you without even pulling anything, this is a very strong support and resistance zone. So generally what happens with these zones is you'll kind of see them get, so it's kind of not really my strategy as far as pulling support and resistance. What is important to me is finding the support and resistance within the levels I want to trade off. So anything below the 618. So we had one here by the 618. We went through it. So the next one's around the 786. So now what's important to me is to not take the first reaction. I need at least one liquidation. So that's the first thing I'll check for. So this is a support and resistance liquidity level essentially. Here we liquidate price once. That's enough for me to know the market's been manipulated. We're at a good level. We're at a good price. So now ultimately we want to see that realignment of the daily time frame, which is currently bullish. So the realignment process for me comes from one break, two breaks. You could say we have two internal range breaks. And that puts us in the category of being realigned with the daily time frame. There was likely a buy in here that was possible. I wasn't looking at US30 till actually the following day. So now the next thing I want to do is kind of look at the last couple 1 hour legs, and we want to figure out where the reactions are coming from. So again, the reaction is coming from, you can see the reaction here came from the 786. So anytime I get a reaction from the 786, I look for a reaction from the 618 and lower. If I get a reaction from like the 50, I'll look for a reaction between the 50 and the 618. So that's kind of telling me the market's pulling back deeply. That's telling me the market's currently not in a trending phase. So this is what you would call a market rhythm, if you will. When US30 and gold are trending, 90% of the time when they're moving, you're going to get a pullback to maybe here. You're going to get a pullback to maybe here. The odd time, you might get the odd 50 touch. You're not going to get too many pullbacks below here. So with this information in mind, that's telling us, that's giving us enough information to know that we don't want to be swinging into daily levels right now. we want to be holding into daily levels and really going for pips when that fib's not pulling back to even 50. So essentially what you want to see on gold or US30 is this. When you get this, you could start targeting higher levels because it's not pulling back. When it's deeply retracing, that's telling me the moves are going to be smaller and that the targets are going to be daily highs and lows, and that the targets are going to be the first liquidity level, which in this case would be here for me. So that would be the first liquidity level. The second liquidity level, which would be essentially the daily high. And usually when it comes to the 1 hour and the 4 hour, I find these pairs like to fill imbalance. And I'm going to show you what I'm talking about. Imbalance is not really something I used a lot with Euro USD, whereas with US30 and gold, I utilize imbalance as part of my rhythm. So there's a couple ways to view it. You can see right here, completely filled our 4 hour imbalance. And we can say we have another 4 hour imbalance here. So I'm gonna show you what happens here after, which also gives us a 4 hour imbalance here. Now these levels are very important with these pairs, especially when the market is not fully trending. I find these are now my reactional areas. So this is kind of my key areas. This is my playing range, which is telling me that this candle shouldn't get invalidated if I'm buying. And ultimately, higher probability is still to buy in the direction of the daily. So now, so I didn't trade this day. I started US30 on Tuesday. So we're going to fast forward to Tuesday. And ultimately, I come into the market right before the, right around 4:30 a.m. my time. So this is 4 a.m. So this is good enough. So going back to our market rhythm, if my last leg reacted kind of around the 786 mark, I'm going to pull this leg as well. Now notice how this leg, it didn't break anything, but I still know that if I reacted from the 786, I don't want to be looking for trades above the 50 or even the 50. 618 is my minimal. So now what's important to me at this level is understanding that the market has established a rhythm. What's the rhythm? We reacted from a peak and valley, which is a 4 hour imbalance. What is my expectation? My expectation is to fill the imbalance. Our confluence is the fib level. And as we begin trending, I'm sure past FOMC, the pair will really start moving. I'll kind of show you guys the difference in the market rhythm and pretty much how you can trade these pairs with nothing more than a fib and reactional levels, and just ultimately trying to align these levels. So this was my first US30 trade in probably a couple of years. So for me, so I come in, so this was an early trade. I come in around 4:30. Now, I want to say, don't remember how I fully entered this trade. I believe it was one more break, so I might have still been kind of half asleep. So we're realigned now, right? Imbalance is filled. US30, when it goes sideways and it starts breaking up to the top, that's a reversal usually. One break, two break. So we're realigned. Had I been awake, I probably would have taken this. So I'm probably about to get to the charts in the next 5-10 minutes here. So I probably would have walked into something like this. So for me, I am going to kind of look at how price is moving. And for the most part, you could kind of say price is moving around that 50 mark, maybe not even, maybe not quite. So what I would do now is just stick my limit in somewhere around here. Now I'm not chintzy with the stops. I don't mind covering more, especially if I'm taking the entry before the New York Open. I'm going to give this trade breathing room. Because we're going for a higher pip count, essentially, I don't need to get greedy. And obviously, depending what happens at our reactional levels, we may or may not choose to stay in the trade. And that's just something we'll talk about. So this is kind of a buy limit I put in. Now, there's a couple of things to note. We have relative equals here. We have imbalance here. I'm going to cover about halfway into this imbalance. Again, it's kind of how I trade these pairs. 530 candle taps you in, and you cannot break even on this pair very quick, especially until the open gets moving. And ultimately, price creates liquidity, liquidates. And we could get a couple more drives in. I don't believe this one drives in at all. No, it doesn't. So this takes off pretty quick. So this is right according to plan. Again, I probably wouldn't break even too quick on this. This whole leg to me is inefficient. It could get balanced. Now I can also go to the 15-minute and I can kind of see how price has been moving. So now I can kind of look at this pullback, and if I look at it, I'm around that 618 mark. So now we can kind of anticipate that the pullback's coming below the 50 if it does pull back. And this is all information coming from the previous legs. So we're seeing, think of the rhythm as, is the market running? Is the market walking? Is the market crawling? And this is essentially, is the market consolidating or is the market trending? If it's trending, what's driving it? When there's no big fundamentals driving it and they're just like little fundamentals, it's generally not going to trend. So NFP, CPI, and FOMC, they usually set the trends. When you get to smaller news like JOLTS job openings and stuff, more intraday stuff, and ties in more. It's the micro that ties into the macro. So I can basically say we're, below that 50, around the 618. There's a good chance the 618 gets tapped. And we already had this information from the previous leg. Now, is this going to work for you every time? No, but I would say 2 out of 3 times it'll tell you where to look for a reaction. And that's pretty much as simple as I've made my trading. It's just liquidity levels, what's my daily rhythm, what's my 1 hour rhythm. And we're going to do another example of a couple of trades I took the following day. And basically just show you guys the thought process behind the strategy. So I believe we closed here because it went sideways. So I believe we got out around here, this sideways consolidation. And I want to say it did go the next day because we bought it back up and went for the same target. So that's my management. I went through the first, I went through my first level with force, and then we got a reaction, then we kind of started going sideways. The same thing I told you guys here. Sideways means possible reversal. That's a close for me. So I see about 3 or 4 candles going sideways. That's struggling to get through that level. So we closed out around here, and you get just under a 4R. Something I want to mention too is we did start a analysis group this week, both a free one and a VIP one. And ultimately, my goal is to give out some of the nighttime analysis, probably once or twice a week at the free group, and obviously the VIP group every day. And we do send these trades out the night before. So the analysis group is essentially more educational. And some of you have asked me basically for reasoning of why we're taking the trades in the signals group. So we came up with the analysis group. I'm going to link the analysis groups in the description. Even if you don't want to be part of the paid group, you're going to want to join the free group because we actually give some of these levels away. I believe the following day here, we gave our free group the levels which I'd be looking for the buys before they happened. And you guys are welcome to join the free group and see that that actually happened. So this was that day. We can go back and we can just basically show you how the process repeats now. So we could skip Asia. So this one, had we held the TP, we would have got almost an extra R. Until the market's truly trending and I'm dealing with internal ranges and internal PA and all the imbalance levels being very reactive, I secure my profits. Usually this happens the week of big news or the week before. So we're going into FOMC this week. Post FOMC, I would have no problems holding this to the high. During FOMC, I will cut my own trade down and take some profits and secure it instead of getting greedy, because it's just, I just find if you get greedy, you sometimes end up with nothing. And ultimately, you just want to secure your profits. So, again, now let's talk about how price printed overnight. So I think we actually might have even gone one back. We'll go one back. So I come in about, I guess I'm already in, yeah, I'd be in the market. So I didn't catch the sell, by the way. Still looking for bias. Bias hasn't changed. So let's go back to the daily. And ultimately, I know there's possibly a level here. Price didn't come here this week, but it's of interest to me. Just to show you guys what's going on, we'll keep things really, really simple. Ultimately now, so we got a reaction from our rhythm level here. There's really no data on the 4-hour aside from a point of liquidity that could react. So we can make this one that. I'm going to delete these. I'm going to delete these. I'm going to delete these. So these kind of played out. Those levels aren't of value to me right now. We can delete this. We can delete this. These levels have all played. They have no more relevance of any sort to you. And you can kind of see this whole leg's running efficient. Now, as far as our entries, I have a couple of liquidity levels that interest me. We have one here, and we have one here. So there is a couple of ways to do this. For me, because we took out the daily high, I'm going to use the whole range. I don't need to pull this. I'm going to pull this whole range, and this would essentially be a higher time frame pullback. Now, just before we do that, let's just look at this last leg. Reaction came from this last leg impulse. We pulled back. So you could say the reaction came from around the 618, maybe just above it. So I know that price is likely to come below the 50 in this case. And this is, again, going on the data that we're not trending. When we're trending, we should not be really even hitting the 50. So I know that around the 50, I have a level of liquidity. This level of liquidity is here. If I come to the 618, I would be utilizing this low as liquidity. And if I come to 786, I would be utilizing this level. So these are all kind of levels I'm looking at. And ultimately, price is running pretty efficient. And when I say efficient, there's no real imbalance here at all. So when there's no imbalance to fill, so you can see filled, filled, I would expect price to react higher than lower, but ultimately we just wait. And also the New York Open itself is known to manipulate. So price goes down. So this was our news release. Just a quick touch. Forecast was 50.8. And the actual is 53.8. So this is actually better than expected. So that should push price down. What I'm going to say about that is you could almost say it's priced in, as in institutions knew ahead of time. Now this is pretty common. It happens. And ultimately, we're just going to wait for price to react. Price is still going down. Price reacts. Another bullish. I believe I waited for one more. Yeah, so we took this. And ultimately, again, breathing room. You don't need to choke the trade. And essentially, you just kind of want to see price push away. So you can see we ended up going between the 50 and the 618. Now, I know if price doesn't give me one pullback and kind of a break, that we might be coming lower. Now, based on what I see and no imbalance, there is a chance that it might not. So we ended up taking two positions on this once price showed us it has found bottom. There's my pullback. And ultimately, once we have this, I can ultimately look for another entry once I'm a little more certain. So that's my first pullback. So you can see the order flow establishing, another pullback, and ultimately you have another pullback. So I could pretty much do buy stop and cover comfortably. And the idea is now, maybe not quite that big. So we have imbalance here. I think it was that big. So not a high R count on this one, but together they add up pretty good. Again, so what is this? This one's about 235 points. This one's 171, but you're utilizing one move to catch 400 points plus, which ends up being, I don't know, like 4.3 R or something. I think I did get in smaller. If I actually remember correctly, we market executed this. Most times I will put a buy stop where I want price to come through. I think this one we market executed. And now what you want to do is you want to start managing. So from a management perspective, usually when I see order flow like this, it's again established rhythm. This is likely not pulling back. So what I usually do is break even on one and half risk on the other. So now if we lose, it's about half an R. There's no commissions on US30, which is obviously another reason that it's a great pair to trade. Yeah, there wasn't a whole lot to this one. Thursday, we did not trade US30. Friday, I actually became liquidity. So we had the right bias, but Friday the market wanted to come higher. So Thursday I didn't trade. Okay, so I think let's go one more day. Just kind of show you guys what happened on Friday within the way we're trading this now. By the way, something I want you to notice, and I was only looking for sells at this time, so I didn't take this buy. But if you notice how there's no imbalance here, no imbalance, no imbalance, no imbalance. The only imbalance you have left is here. This is part of the rhythm. I was waiting for this to basically react and look for a sell based on our fundamentals. Bias was right. I was early. Well, I think the bias was right. I guess we'll see how it plays out on Monday. So the news release did this. So I was essentially waiting for a reaction, a pullback, and a continuation. And I was basically looking to sell from half of this gap. Long story short, I took a hit here. Got a good reaction, but price basically kept going up. Now I want to show you guys something if you remember where we started this video. So 4-hour imbalance filled, 1-hour imbalance filled, fully efficient, reaction off liquidity, 1-hour imbalance filled. And while I probably should have sold this again, I didn't. I just called it a day on Friday, but we came to our 4-hour imbalance level. And ultimately, I think this would have been a fair target. Whether or not it goes, we'll see overnight, or I guess we'll see how this opens. So it's Sunday right now. Obviously, I don't know if this hits TP or not. But yeah, I sold here. I didn't end up reselling, but the proper thing to do would have likely been to put a limit in kind of halfway up the leg, take a big stop, target the low. So this would have been a proper trade to me. Now it ends up tapping you in. Whether or not it goes, I have no idea. This would be, I'd be break even on it regardless over the weekend. But same concept. I don't think entirely this was a horrible loss on the sells, but it happens. But yeah, like I said, I didn't re-enter this, but had I, this would be my break even. I would target the low at the bare minimum, and we'll just see what this does. But yeah, I hope you guys enjoyed this YouTube. I'm going to be making probably a gold version of this in the next few days, maybe the next week. And ultimately, I'm just going to show you how I trade these pairs with nothing more than order flow and a fib and 5 and 15 entries. I think the 5 and 15 entries are a lot more friendly for a lot of people. And hopefully once we get FOMC done, we can start getting some, bigger moves instead of 300 point moves. Maybe we can start looking at 5, 6, 7, 800 pip moves. But we'll work up to that as the fundamentals and technicals align. Right now, the fundamentals and technicals are no longer aligned based on the NFP release. Just to touch on that, we're looking for US to cut rates. To do that, the labor market needs to be weaker. Inflation needs to come down. Right now, inflation is not coming down fast enough. And after the NFP release on Friday, you could see the labor market came out quite a bit stronger than forecasted. So this actually pushes rate cut bets back, which could push us into a deeper daily pullback. And when I say deeper, I would say we won't truly know until FOMC gets released. But depending how FOMC and CPI comes out, it'll set the tone. If CPI comes out high inflation, and FOMC comes out with no rate cut bet sentiment, people are going to be looking to go dollar bullish, and dollar bullish is going to mean US30 could see a deeper retracement, and we could see, something along the lines of deeper retracement continuation, or deeper retracement and a bias switch. The last thing I ever want to do is change a daily trend. So until multiple fundamentals support that, we won't know. But by the time I make the next YouTube, FOMC will be out, CPI will be out, and we'll kind of update you guys on that. But yeah, make sure you get involved. Join our free analysis group. If nothing else, you can see some of the analysis I'll be sharing through the week, and hopefully they help you guys catch some trades. And yeah, feel free to leave me a comment. You know, we appreciate any support we get, and I appreciate you guys being here for this long. I think it's going to be I think it's going to be pretty cool with what we're planning. We're going to give a lot back to you guys, and I think, like I said, the 5 and 15-minute entries will help a lot of you guys. So yeah, again, thank you, and I will see you guys in the next video.